Hey, what's going on, everybody? It's Marshall back with bids and offers with another order flow trading video. And I want to show you guys in this video a very high quality order flow setup that I spotted when I came back to my desk yesterday after having taken a couple losses in this range earlier in the morning. So I want to show you guys what I saw in hindsight. Remember, this is in hindsight. This is not a trade that I took. This is not a trade that I have executions on. This is essentially a very high quality setup using volume and a demand zone and a high probability target to combine all those confluences together to make a really great trade. So there's typically three things that I look for in a good trade. Number one is opportunity. Okay, opportunity is basically presented when you have a couple different confluences stacked up together, putting the probability of your trade working out more in your favor than not. So for me, those confluences were essentially price fell down into an area where it supported, where this area, these buyers in here supported a move that presented about an 85 point move to the upside. From 40, actually about 95 points. So 49.90 all the way up to 50.85, 50.87. So that's almost 100 points right there off of this level right in here. And as you can see, if I scroll through earlier, this level was tested once, tested twice, and then tested a third time. We actually broke through on this wick right here. And then all this price action in here, anything after 902, we were actually holding above the 49.80s. And we inevitably broke out of this at the open with some pretty aggressive buying, pulled back into it, into the high of this zone right here, and then we had a massive rally off of that area. So that's the first thing I'm looking at. What I really like about this zone is that right after price moved away from this area, it presented a 90 point upside, which is really, really good. So what I wanted to do, again, this is hindsight, not a trade that I took. A trade has three things. I forgot to talk about the other two just now. So the first thing is price in a support or demand zone where it previously was supported by buyers to play the market long. Vice versa, if you're shorting, you want to short in an area where the market previously, the sellers have been strong and overwhelming the aggressive buying, thus selling the market off. So you want to put yourself on the right side of the market. Number two, price is outside of the cash session value area on the day. This is a volume profile. On this volume profile, I have number one, all this blue in here, these are volume levels at price. So at 5,050, this long blue line right here, this represents all the volume that was done at 5,050 from the 9:30 open, if you look down there at the bottom of my screen, the 9:30 open, all the way to current market price, where I have this first ellipse drawn down here, where I likely would have wanted to take the market long. So this is all the volume information that I have on the session so far from 9:30 to 11:02. So the value area is essentially the one standard deviation range of the volume profile. So from this line up here at these 64s down to these 12s, 68% of the volume that has been done on the day within the mean here, which within the VPOC 5035, all of that volume was done between 64 and 12. So this is the area where price likely would want to revert back to if it cannot build volume outside of the range. Now, typically what you want to see with a mean reversion trade is price quickly moves out of the area, does not develop that much volume outside of the area, and then quickly you see reasons for the market to come back into this area. So that's the second thing, is prices outside of the value area using mean reversion theory. So it's essentially betting on kind of like a rubber band. So what are the odds a rubber band is going to snap when it's just sitting on your table? pretty much no odds, right? It's very highly unlikely that the rubber band will snap or return to its original state when it's already in its original state, right? But what if you take that rubber band and you stretch it out all the way from here all the way to down here, right? You stretch that rubber band out as hard as you can, and it's really, really, really strong, and it feels like it's just about to snap, right? What are the odds that you let go of that rubber band and it continues back and it shrinks back to its original state? It reverts to the mean. It's likely not going to stay stretched, right? It's probably going to come back to its original state. So that's mean reversion theory using this trade. Number three, the reason that I mention order flow with this trade setup is that down here, I would have absolutely no reason to try the market long here just being in a demand zone. That really means nothing. Just because you're in a demand zone or in a supply or a support or resistance, a break above the high a day or whatever it might be, just because you're in that zone does not mean to take the trade. What I like to see are people that get trapped inside of this zone. So there were sellers that initiated a lot of selling, starting up here at these 35s all the way down to these 49.80s at this low right here. So what I really like to see are sellers that sold off this entire market down until down here, and they keep selling, right? They keep selling into this area where buyers previously defended very, very hard for a 95-point upside. What's going to happen when those buyers come back to break even? All these buyers that got long down here, price reverted all the way back down to them. These buyers are likely going to try and defend their position. Big market players that got in on this retest right here and early in the pre-market, right before the market opened, these guys don't want to see red on their positions, okay? And also, subsequently, not only do they not want to see red, but these sellers have brought price all the way down to this area. Now, they're likely going to want to get out of the market and capitulate on that move. But most of their liquidity is probably going to lie down here beneath these lows here, where these buyers start to get out of the market, selling their positions for a stop loss, which means that they have to sell. What do sellers have? I'm sorry. When the sellers need liquidity to keep pushing the market lower, they need somebody to buy. They need somebody on the other end of their transaction, right? Sellers can only sell if there is a buyer on the other side of that, okay? There has to be a passive participant that they can sell into, okay? Now, here's where I'm going with that. When these sellers want to bring the market lower, they want to keep making money, and they're selling, but price is not moving down. And the difference between the ask minus the bid at this price level is starting to go negative. That is a negative delta. What that tells me is that the sellers are selling more volume on the bid than the buyers are buying on the ask. The sellers are selling into a bidder that is sitting in here, willing to scoop up these sellers, and then when these sellers run out of steam, the bidder is going to start to get in the green, and then aggressive at the market buying will come in once these other participants realize that these sellers are trapped. So what I like to do is spot these people down here. Now what that looks like on this chart actually updated since yesterday morning, so you can't actually see the delta that as easily on this candle right here, but this is the dip that I'm talking about. It breaks below this low right here. You see all these lows that got put in? Defended once, defended twice, defended 3 times. Broke below it right here, and then immediately reclaimed these lows with buying aggression. Look, 1,300 buying, 1,400 buying, 390, 744, 3,000 right here. 3,000 volume on the ask. 2,979 people hit the ask to lift the market higher. When these buyers start to hit the ask at 3,000 volume compared to very little buy volume before, I mean very little buy volume, right? This is a key level right here. This is a key level from, number one, this demand zone where these buyers supported last time. Guess what they're doing now? They're also supporting. And if you look right here, the sell volume is 3,220. but the price did not go down below this low. This is actually a green candle. Price closed on this candle right here, moved down. All these sellers got trapped in here because a bidder kept buying their sales, and when their sales ran out, that bidder was in the green. Price recaptured this low where all these aggressive market participants started to get long into the market, identifying these trapped sellers, this negative delta in here. Look at the negative delta down on the bottom. Minus 3.89%, minus 8.4%, 8.54, minus 10%, right? All the selling, and we come down into this level, and then the buying starts. So essentially what I would want to look for with this setup is if I can get long down here, if I have a chance to spot really strong absorption, which is a buyer sucking up the sellers in this area, if I can find really strong absorption down here and I can have a relatively tight stop, I can get long in here. But the higher probability scenario to try and take this trade and profit off of this idea is to wait for a retest back down into the area. So price comes up like this, comes back down into the area that just got supported by this bidder, and then still has struggle breaking to the downside. You see all this red in here? My footprint sensitivity settings are a little bit off for this volatility. And also, I have a trade alert indicator on this chart, but for some reason it's not showing up right now. But there was a very large sale in here. A lot of selling that came into this level, and these sellers in here that initiated their positions could not see lower prices. They could not make money on their efforts. What happens when they stop making money on their efforts? They have to get out for a loss. What do sellers have to do when they are not making money and they are already short in the market, where they are -1 contract or -10 or -100, whatever it may be? What happens when they are in pain, price starts going up, and they start losing money? What do they have to do to close their position? They have to buy the market to close their position out. They have to bring the market back up by hitting the ask and essentially canceling out or evening out their position. If you sell first, you have to buy afterwards to close your position. If you buy first, then you have to sell afterwards to close your position. -1, +1, even. And then for a buyer, it's +1. You already have a share or a contract, whatever it may be, and when you have to sell it, it's -1, and it evens out your position. So all these sellers in here that are getting short, trying to bet on a break of these lows, and for price to come down beneath this demand zone where buyers previously supported, they have to sell in this area. And when price starts going against them, and this heavy buying starts to come in, more and more, 2,900, 2,200, 1,800, 1,000, when these buyers start to come into the market here and hold above the area where these sellers were selling all their efforts, all the selling in here could not go lower. These buyers in here are going to start to move the market higher, and these sellers have to get out for a loss, thus market buying the market. They could limit buy, but their stops are up here. They're all up here. When price starts going up, when these aggressive buyers start to enter the market, which also can be perceived as the sellers getting out at the market, right? Price starts to move up. Now, if I wanted to take the market long down here, under this VWAP, inside of this demand zone, where I find trapped sellers, I need a good target to target, right? I want nice reward on my risk. I want a nice area where I have a high probability, number one, of getting my target hit, being able to liquidate my position and get out of the market. Number two, I want an area that provides me great risk reward on my potential stop loss and my entry and my target. So if I were to spot these trapped sellers here, price moves up, price comes back down into this area, and I see the same thing. I see this, bam, 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 and all this action on the bid here. There's not that much volume in this candle, but there's a lot of action on the bid here, and a lot of people trying to sell. If I spot this happening again in this area, what I would want to do is get long on this pullback, see price come back in, defend again, so that I already know these early buyers are factored into the equation. essentially, I can have one more extra confluence for this trade, which is, hey, there are buyers that just defended this area. So that adds to my probability of the setup working out. So I would want to ideally get long on this pullback somewhere in here, probably these 86s to 85s, 84s if I'm lucky. Because if I get in at these, say, these 85s, my invalidation point is, hey, if the sellers can actually break through all this level down here to these 79s, 78s, and all this selling in here starts to get paid on their efforts, I'm going to get out for a loss because these sellers are technically winning and the buyers cannot support the market here. So if I'm a buyer and I see a sign of weakness in the market, I want to get out for a loss, right? So if I can get long in here, say at these 85s or 86s, and I have my stop down here at these 79s or 78s, that's a 6 to 7 point stop on a potential target of 50.22 is my target. Now the reason you never want to enter a trade without a proper target, okay? You need a target that, number one, offers you a high probability of being able to get out at the market, right? So being able to actually liquidate your position and close it. And number two, reasoning, mean reversion theory that I like to use, levels that got retested and defended, or a switch up level, like say like in here, this area got defended 3 times, right? Up to the upside, and then the sellers sold through it. So now what I want to do is target this level in here, because it is going to offer from 49.85 to 50.22. That's going to be like a lot of points, right? I actually need to run the calculator on that. 50.22 minus 49.85. That's 37 points on a potential 6 to 7 point stop loss. So that's like, almost 6R. That's a pretty good risk reward ratio on that trade. So this 0P in here, this is a zero print, okay? These zero prints are essentially when price moves through a certain area. See this blue line right here? When price moves through this certain area to the upside or the downside, and there is a zero print on the bid side or the ask side of the market, that means that the most recent time that price moved through that area, that price, it left a gap in the market, in the auction, of people on the bid or the ask, whichever one it may be. There's a gap, there's a misprint. There is nobody on the bid side or the ask side of the market, whichever side it may be, and you can have a zero on both sides, by the way. That essentially means that nobody was able to get filled there. Okay, I'm going to zoom this in for you so you can see it a little bit better. So right here, right above this blue line, you see this zero right here? There was 12 volume executed on the bid, okay? And there was 0 volume executed on the ask here. So that means that there is a misprint in this market, okay? Ignore the zeros at the top and the bottom of these candles. Those actually don't matter. That's because that's the start and the end of the candle, and most of the volume is done on the inside. So I only look at zero prints on the footprint that are at least 1 tick into the candle, like say this one right here, or this one right here, okay? So this zero print on the ask is a misprint, and this is a failed auction at 50.22.50, okay? These people in here, there was likely somebody that wanted to get filled on the ask side of the market. The market is an auction, and it moves through prices all over. And what it wants to do is essentially fill everybody that it can at every single price in the entire trading range throughout the day. So if I can spot trapped sellers down here beneath the VWAP out of the value area on the day where most of the volume was done right up in this range, and this area was once defended by buyers and then retested by sellers and proven weak by sellers, and there is a zero print here that can offer me 37 points of profit on a potential 7 points of risk if I get in on the retest down here after I spot that trapped selling inside of a demand zone, that is a high probability setup, okay? This zero print right here gets filled. This is a good confluence target. It's inside of the value area, mean reversion theory. It is in the area where buyers once defended the market and then sellers sold through. So it's a confliction point, okay? It offers me 37 points of potential profit on a potential risk of 6 to 7 points, okay? That's a really good risk-reward ratio, anywhere from 5 to 6R, right? So, failed auction, a magnet for price, a reason from the auction market theory perspective for price to revisit this zero print right here. Okay, if I scroll forward, it gets filled. This is where I likely would want to exit my position because I'm up 37 points. Okay, the buyers have proven themselves in the market. The market mean reverted back into these 5022s. Okay, and it actually did hit the VPOC, the highest volume traded price on the day, right here. Okay, it's a little bit less probability because it's a little bit further away, but it would offer more reward. I want to get out at this first zero print, and I want to get out in this area, this confliction point, and inside of the value area where I can make 5 to 6R on my trade. Okay, so again, the market sold off into an area where there were buyers previously that defended the market massively. Okay, we're below the VWAP, which is not that significant, but essentially if you find trapped participants very close to, above, or below the VWAP, that essentially tells you that there's a lot of people in here that don't want the market to move below the VWAP, and they want the market to move back in. If there's not much volume being done, look at how thin this low volume node is in here. If there's not much volume being done in this area, and the sellers are really trying here, but there's a bidder scooping them up, and people are not willing to do as much business down here, and we have a zero print in a confliction point higher that's not too far away, but far enough away to offer a great reward on our risk, that would be a great trade to take. Okay, that would be a great trade to take. I think this is a very high probability, high quality setup. I take these all the time. There are so many examples on my page, Instagram, IG, at bids and offers, BIDSANDOFFERS, bids and offers, just like it is on my YouTube. There are so many examples on that page showcasing great setups that I use order flow to find trapped market participants at a key level like this demand zone to play a mean reversion back into the mean, back to a confliction point where there may be a zero print. Okay, this is a repeatable setup. The last thing that I did not mention earlier for a high quality setup is for it to be repeatable. You have to be able to take these setups over and over and over again. It does not mean that you have to find them every day. It does not mean that you have to win every single one of them. But for you to have an edge in the market, for you to be confident in the ability to continuously put money on and make money, week over week, month over month, you have to have a trade system that is repeatable. It is absolutely crucial. You cannot win one good trade and think that you're a great trader and make money week over week, month over month. You need to be able to do it over and over and over again, okay? If you want a positive equity curve, you need to be able to take that same high quality trade over and over and over again. It does not mean you have to spot it every day. It does not mean you have to take it every day. It does not mean that when you see it, you have to take it. Your confirmation should be how strong is the absorption? How far away are we from the mean? How strong was the demand zone that we are currently in, or the supply zone that we're in if you want to short? Okay, you need good confirmations with your confluences. Okay, when you add up all these confluences and you put all the pieces of the puzzle together, you give yourself a higher probability of the trade being able to work out, and you add edge to your system. Okay, you give yourself free edge. Okay, if I wanted to get long in here in the middle of this chop, I don't have much edge. How can you mean revert when you're already at the mean? Oh yeah, I'm gonna buy this dip for a move back up to high day. Well, listen, the odds of that happening are a lot lower than you getting long all the way down here and the market mean reverting, the rubber band coming back to its original state right in here. Okay, essentially also buying the market up here. Oh my god, guys, retail, there's a fucking breakout. Let's buy the market at the highs, and then these offers that come in up here, see this positive delta up in here and this big seller that came in, all these people up here are selling the market. You are buying into passive sellers. Now, you are going to get wrecked and price is going to come back into the center. I'm not saying that breakouts cannot work. They absolutely can work, but not if the buyers are strong enough. Not if the sellers are not strong enough. Okay? You need to have confluences. A great trade consists of, number one, confluences. Number two, you need to have some sort of a theory that you're working with, whether it be auction market theory, mean reversion theory, or some kind of a statistical significance to your idea. Okay? You need statistical significance in one way or another. Okay? For me, it's identifying trapped market participants in areas where the market previously continued or reversed. Okay? That is what I like. It's my bread and butter. I am working on an order flow course for people to learn very in-depth order flow concepts. Delta, volume profile, mean reversion, auction market theory, finding trapped participants, finding participants that are getting paid, continuation setups, reversal setups, VWAP, market demand structure zones, confluences for your target, your entry, full trade systems that I have in place, standard operating procedures, you name it. I am currently building a program. I have a lot of demand for this. There's a lot of people reaching out to me that really want me to offer something. So I am going to build out this program, and it's going to be very, very, very value-packed. You will be able to successfully trade using order flow and the concepts that I teach on my page with repeatable setups and make money, okay? Now, I'm not going to promise you guys any success. I'm not going to promise you insane results, but I will promise you that when it is out and you go through the entire program, it is going to be some of the best information out there, okay? There's a lot of misinformation in this online space right now with trading, okay? There's a lot of people that are swindling people. There's a lot of people repurposing content that does not mean a fucking thing, and there's a lot of BS out there right now. So if you guys really want a nice order flow trading course, I am going to provide it. Just leave me any comments you have down below, any suggestions, any future video ideas that you want to see, any setups that you want me to go over, you name it. I will respond to every single comment. I'll respond to every single DM. Don't be afraid to reach out. I will help everybody that comes to me. And yeah, basically that's pretty much all I have for this video. Follow me on Instagram at Bids and Offers. Follow me here on YouTube. Subscribe to me here on YouTube at Bids and Offers. And follow me on X at Bids and Offers 1, I believe it is. I'm trying to get on there more. And my TikTok, I'm going to be updating later today. So I'm going to start to put all of my reels and stuff onto my TikTok as well. So I want to grow on there. So please tell your friends about me, about this page. If you have any, if you really want people to get into it, if you want to show people that are currently struggling as a trader, yeah. So follow me on my pages and stay updated for another video that I'm going to try and drop this weekend. I really appreciate you guys watching all the way through. It means the absolute world. I just crossed 150 subscribers. That's not many subscribers, but you know what? Like that picture that I just posted on my IG the other day, last night, when I put 150 people into a picture of a crowd, that's a lot of people. So it means the world to me. Thank you guys very much for watching. I hope you got a lot of value out of this video, and I hope that you learned something, and I hope that you can implement something into your trading every day and make more money. And I hope you guys have a great day. Thank you very much for watching. I'm sorry that my speech is kind of messed up. I'm still getting used to taking videos and recording my voice. So yeah, I appreciate you guys. I hope you guys have a great day. Thank you very much.